Hello and welcome to this special episode of Emirates 24/7.
On tonight's show, we're taking a look at how Dubai's real estate market is adapting to an evolving investor climate.
Where should you be putting your money? Which areas have retained their value?
We'll be speaking to CB Richard Ellis, Cluttons and propertyfinder.ae to get the lowdown.
And that's where we start tonight's program. Welcome back to Emirates 24/7. Now, it's fair to say the property sector in the UAE is one of the most discussed topics among residents and investors, with many wanting to know if it's safe to buy, and if so, where.
This evening, we've got the best advice from the biggest property experts here. Joining us in the studio is Richard Paul, the head of UAE Residential Valuations and an associate director at Cluttons UAE. Nicholas McLean, the managing director of CB Richard Ellis in the Middle East, and Renan Bourdeau, the managing director and a partner at propertyfinder.ae. Thank you so much for joining us this evening.
Thank you.
So tell me, do you think the market is improving? Nick and Richard, we've of course seen some good figures coming out from Dubai Land Department. Sales double the same amount during the same period this time last year. What do you think? Are we really seeing it recover?
I think that we can't get ahead of ourselves, really. I think there are certain sectors that are doing better than they have done. Certainly some areas in the residential sector are doing okay. Some of the hospitality side is doing quite well. But again, there are some things that are not doing so well. So we have to, be quite cautious in what we sort of state.
Mm-hmm. Nick, what do you think?
At CBRE, we're predominantly a commercial agent, and we see, at the end of last year, some very interesting figures. We saw a maximum take-up, the best year we ever had in terms of take-up in the commercial market, both in volume of deals and the total quantity of space let. And all that, in due course, is going to lead to significant residential demand. So we're beginning to see the signs, yes.
Mm-hmm.
Well, that's definitely positive. Renan, a question for you. Are you seeing more interest from your perspective in terms of sales or rentals?
Well, you always have more demand in terms of rentals. I would say that on the website propertyfinder.ae, we have about 2/3 of the demand, which are toward the rental segments. However, we've seen a huge increase in the sales compared to a year and a half and even 2 years ago, which shows some positive signs of recovery. We even experienced some price increase in Q1 2012 in some specific area, and price stabilization in major area in Dubai.
Mm-hmm. Which areas do you think are doing the best at the moment? As we mentioned earlier in the report, earlier in the show, it seems to be Dubai Marina, Palm Jumeirah, downtown. Is that the same sort of thing you're finding?
We are, yeah. I mean, it's also, you have that you mentioned a lot of apartment developments there. It's the villa side that we've really seen an increase, and it's all relative. I mean, we've seen figures pick up from maybe 6 months ago, but prices are still around maybe what they were in 2007. So, yeah, I mean, these are the areas, these are the usual suspects that have done very well in the last 6 months, and there is demand for them, and it's growing both on the rental side and the sales side. So, but it's slow growth, and that's almost really what we want to see.
Mm-hmm.
People are taking the opportunity to upgrade where they've been historically because of the prices, and they're looking at things like the property management of the building they're in some instances the quality of the owners association, and perhaps in some instances the reduction in their journey to work time. So we're seeing quite a mobile market where there's plenty of opportunity in the marketplace, and that churn is good for the market. And as we get more business done here and more people come into the marketplace, then demand is going to grow stronger. So all the positive signs there for a future growth in the marketplace are now being laid down.
Mm-hmm. Fantastic. And Ren, just quickly.
Yeah, I think that the market is really going toward the end user now rather than the investors. So the demand has shifted basically, and the request from the people looking for property to buy is really different to what it was 2 years ago.
Mm-hmm. So still wait and see. Well, gentlemen, sit tight. We'll be back with you in just a second.
Welcome back to Emirates 24/7. Just before the break, we discussed the current state of the property market, and now we move on to financing. Joining us again in the studio is Nicholas McLean, the managing director of CB Richard Ellis in the Middle East, Richard Paul, the head of UAE Residential Valuation and an associate director at Cluttons UAE, and Renan Bourdeau, the managing director of propertyfinder.ae, and of course a partner there as well. Gentlemen, welcome back to the show.
Hi.
Thank you for joining us. Now, I want to talk a little bit about the issue of funding, bank lending in particular, and the fact that we are starting to see banks sort of opening up and lending a little bit more, but there, of course, there was a lot of criticism post-financial crisis that they had been a little bit too free with that credit. So how are we seeing things change? Go ahead, Rich.
I think all the banks, that's how they make their money. They have to lend, and they're fighting over a much more smaller sort of market than was originally back in sort of 2008. And yes, they're reducing their rates, they're putting offers out there, but they're still getting, people have to go through some pretty strict criteria before they get approval. And yes, you may hear of offer rates at sort of 4%, 3.5%, but these may only be for 12 months period. After that period, it reverts back to a relatively high interest rate of sort of maybe 6-7%. And you've got to put up 30-20% equity in that. So they need to be in the market to make money. So they're all very competitive, but it's fighting after a quite small market share.
Absolutely.
Now, another interesting story that's just come out, Emirates Islamic Bank over the weekend announced that they plan to release 100% housing for UAE nationals here. Nick, do you think we could see this rolled out to expatriates down the track, and what does this mean for the market?
As a step in regenerating some of the demand in the marketplace, it's a very good step. 100% is extremely generous of the bank. It's being directed by the state. So once again, we see the government looking at ways to stimulate demand within the marketplace. So it's very good. Emirati buyers, though, only make up about 15% of the total marketplace, and therefore we need to see some level of additional finance coming into the marketplace for the other 85% of the market. And the more liquidity there is in the market, the more lending there is, then the better the demand, the greater we return back to some of the prices we've seen historically, and the better the market performs generally. So a good step in the right direction, but not quite there yet.
Absolutely. I mean, Renan, what are your thoughts then more generally on the issue of lending? Also, of course, this proposal for 100% mortgages for Emirates nationals. What are your thoughts?
We have observed more and more marketing campaign towards mortgage products on the site, but I think banks, they still need to loosen up a bit the criteria, as this was mentioned. Maybe it's still too tight for the people to be able to borrow some money and able to invest in a property.
Absolutely. Now, also looking at another obviously piece of big news we've been following over the last month or so, Eldar and Suruh looks set to merge. Looks almost like a done deal. Obviously, don't jinx it, but definitely looks like it's going to go ahead and happen. What impact is this going to have on the property market in Abu Dhabi? Are we looking at a situation where this is definitely a positive thing, or is the reduced competition going to be bad for prices? And again, what kind of impact might it have on Dubai? Any companies following suit? Nicholas, let's start with you this time. What do you think?
I think it's a very good move because we need to see some consolidation within the property markets across the UAE, and Abu Dhabi has taken this step to give those two companies economies of scale. They need to make their development schemes complementary to one another and support what Abu Dhabi and Dubai and the rest of the Emirates are trying to do together. So I think it's a very good move, and I don't think it's going to be the end of it. We're going to see other companies either come into that mix or form separate amalgamations.
Absolutely. Richard?
I think first and foremost it was a business decision between the two parties, and I think there was a lot of duplication there between the two entities who realised that under one roof they can maybe deliver a better product going forward. I think the effect on the market will not be apparent immediately, and it will be very difficult to actually pinpoint going forward if that was one of the reasons for any changes. But yeah, as Nick alluded to, I think it is a good step in the right direction. And I think it will bring a bit more confidence to potential investors into Abu Dhabi.
Now, another topic getting a lot of tension, Renan, there's been a lot of talk about service fee charges, a lot of contention over that, of course, on the shoreline Palm Jumeirah. At the same time, we've just heard the CEO of RERA last month come out and say that Dubai's crazy buildings need a lot of facilities management. And obviously, there are some challenges there. What do you think? Is this dampening investor sentiment today in the market?
Well, facilities management is going to become one of the main criteria for investors in order to invest in properties in the next coming months and coming years. Since now the market is directed towards end user rather than investor and speculator, people are going to inquire about the facilities management, the quality of the buildings, all the service charges and all these kind of things, and they're going to make the math basically, and people are going to have to look into it and make sure that the quality of the buildings and the owners association are here in order to protect the investor. But that's overall a positive sign for the market.
Absolutely. Just quickly then, looking at a more general idea, what do you see as the biggest challenge when it comes to the property sector at the moment? What are we struggling with the most?
I think it is the subject we're talking about. It is facilities management, it is service charges, and as an investor, if you're looking at an apartment building and you're paying 20-25 dirhams a foot on your space, and this is on apartments, and then you're looking to let it out perhaps, and immediately you're at sort of 20-30% of that income just going on service charges. So it has a huge impact on whether you want to buy there or not. And I think this is where you can look at why maybe the villa market's doing better, because you own the freehold, it's an entirety. You do pay a service charge on the community, but it's a lot lower, and it's a lot more transparent, and that helps.
So then finally, just before we go, Nick, when do you think we'll see the market really begin to show some really strong growth? Are we talking 2 years, 5 years, 10 years? What do you think?
I think we've already seen the start of some growth. During the course of this year, in the commercial market, in the best locations, we've seen some indicators of increases in rental value. So if we're seeing that now when the rest of the world is still in pain, then that gives us a significant advantage as we go forward. So I think we're already seeing it. That, I think, within 2 years, we'll see a major impact on the way that things are priced within the Dubai market.
Renan, what do you think?
I agree with Nicolas. I think in the next 2 years, we'll see a proper growth in the market. However, what we want is not a strong growth, but a constant growth. And we don't want to go back to a high level of speculation like it was before 2008. So we need to aim at a constant growth. And we already have observed some very positive signs in it, which are very encouraging for the investor.
Well, definitely.
Richard, finally, what do you think?
I agree, just sort of echoed that. We don't want to see 2008 unfold again. We want to see good rental yields and maybe a bit of capital growth, but not crazy.
No one wants to see 2008 again.
2 years
Sure.
seems to be the way to go. Well, thank you so much for joining us this evening. Really appreciate your insights.
Thank you.
Thank you, gentlemen.
Thank you.